Thank you for checking out the municipal market update for the week of June 27th. This is our 37th posting. My name is Adam Bauer, and I serve as CEO and President of Fieldman, Rolapp Associates. Fieldman, Rolapp Associates is a municipal advisor to government, and once a month, we try to give a municipal market update for our clients and others who may be interested. One of the things I often do is start off by talking about some of the events that are in the news. And there has been a lot, like there is in most 2-week or 3-week periods. But what's probably most important is that the FOMC increased the Fed rate by 75 basis points. This is the largest increase going back to 1994. And this was such a big deal that I'm quoting from the Wall Street Journal. The Fed leaked Monday that the FOMC might consider a 75 rate increase. So the Fed looked up and recognized that they didn't want to shock the market. And what a big deal this was, I think many parties were talking about a 50 basis point increase. And so that Monday, as the Wall Street Journal reported, the Fed made sure they had the news out there that this was in the realm of possibilities. Now, since then, there's been a lot of talk about July going up by a similar amount. So I think there's a lot of folks out there that think in July, we could get another 75 basis point increase. So with that in mind, we'll get into some of the market data. On our first side, we're looking at mortgage rates here. And we highlighted that mortgage rates had gone up very quickly. And then they seemed like they had stabilized or come down just a bit. But since then, you can see now they've gone up more. And so they've gone up as high as, this is a 30-year, it's gone as high as 5.97, currently at 5.94. But keep in mind, for those who say it's still low interest rate, they were as low as 2.82 in February of 2021. So not too long ago, less than half of where it's at today. And so for folks who were planning on buying or building a budget, probably didn't think to double the interest rate before they were looking at their model or doing some of their calculations. So likely to take some by surprise if they're not regular watchers of market news. Now, I've talked about the Treasury, especially the 10-year, and how that oftentimes is a key indice that we should all watch. And that green line represents the Treasury yield curve with 1 all the way to 30 with some key data points there. And that was where things were when trading started, beginning of 2022. And the black line represents where things were at the very beginning of June. Red line represents as of Monday, 6/27/2022. So you can see we really lifted off of that, and we're also flatter. And so that, and then you can hopefully notice that that red line is just a little bit flatter than the black line, meaning short-term rates a little bit higher and long-term rates haven't gone up as much. But we do have a very flat yield curve, and especially when you compare that to where we're in the beginning of the year. Now, we've looked at treasuries here. The other thing we oftentimes take a look at is the MMD, the AAA MMD, AAA best credit, MMD, municipal market data. And this tries to give an indication of where interest rates are for this very highly rated credit. If you go back to just 1 year ago, that's that black line. You can see, once again, it looks a lot like the last chart. We've come off that quite a bit. That red line represents where we were 5 years ago in 2017. So pretty close to the middle. And that green line is as of late last week or early this week on that MMD yield curve. You can just see how much higher that is. Now, this chart we've shared almost every time we've done the MMU posting, but the gray bars represent the range of interest rates for each one of those maturities for that AAA MMD going back to 2005. And the red line represents where that MMD is as of 6/27/2022. For much of our recordings, this red line has been scraping just the bottom of those gray bars. And you can see now we're pretty much average. We're in the middle. On the shorter end, we're probably right on the average mark. And on the longer end, we're just a little bit below that. So quite the change in a pretty short period of time. But this helps give us an indication of, in a historical perspective, where do we stand with interest rates? And we're near the middle of the gray bars in a lot of years. Another thing that's really important and helps dictate how interest rates are trending is inflows or outflows into municipal bond funds. The green lines represent inflows and the red lines represent outflows. We still are experiencing outflows in a lesser fashion than we have in the few weeks before that. So hopefully this is maybe will look like a standard kind of bell curve when we're done here, and that will stop. But what I've shown you in the past is why we've had outflows. We haven't had that much volume in the municipal bond market. And here you're seeing this week, we have a substantial amount of volume in the municipal bond market. We're trending at a higher amount per week than we have the last few years. So now this will be an interesting test, is we've had outflows, so less demand, but we do have a lot of supply. And how will that impact rates this week? We'll likely be talking about that at our next MMU recording. Our last slide here, we're really showing some of the economic data that will be released soon. So certainly worth keeping an eye on. We do have a holiday coming up, and that's Independence Day next week. But we also have the other items here listed. And then on our last slide, as we wrap up, we have our Fieldman Rolapp Registered Municipal Advisors. I encourage you to reach out to any of them for details about the market or any specific deals that our firm has worked on. But thank you for your time and look forward to talking with you again in July.